Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Welcome to another episode of the Mineral Rights Podcast. I'm your host, Matt Sands, and with me is our featured guest, as always, Justin Williams. Good morning, Justin.
Good morning. Thank you, Matt, for having me.
Thanks for being on the show. And today we're going to have the first in a series of episodes about major producing oil and gas basins and plays in the U.S. And the whole purpose here is to provide an overview of the key facts and things you should know if you own minerals in a particular basin. And so if this is useful to you, and if you have any requests on a particular area that you'd like us to cover, please let us know. As always, the show notes can be found at mineralrightspodcast.com. And if you want to give us any feedback, it's at feedback@mineralrightspodcast.com. So let's go ahead and get started. Today's episode, we're going to talk about the Denver-Julesburg Basin, or DJ Basin. And so, Justin, you want to talk a little bit about where the DJ Basin is located?
Yeah, absolutely. So the DJ Basin, it's from northern Colorado and eastern Wyoming, parts of western Kansas and Nebraska, and then extends primarily from north to south, from north of Cheyenne, Wyoming, down to Colorado Springs. Primary producing field is the Wattenberg gas field in Weld County and northwestern Adams County in northeast Colorado. And I know there's some fun facts that you can give, Matt.
One of the cool things I found out in doing the research for this episode is that the DJ Basin, as far as oil and gas production, dates back to an oil discovery made in Boulder County, Colorado in 1901. So it's been around for quite a while. So it's definitely not a new thing, even though there's definitely an increased level of activity in the DJ Basin. But certainly oil and gas has been around for quite some time there.
And as we both know, Matt, with oil and gas, the geology is the driver of how valuable that land is. So in Colorado, what is some of the geology that makes this such good producing land?
Yeah, this is a very productive basin, and it's primarily because there's stacked plays. So similar to other basins, you'll hear about this in like the Anadarko Basin with the scoop and the stack on the Permian, as well as another area that's prevalent. And so that's one of the reasons why wells are so productive there. Kind of going back in time, if you go in the Wayback Machine here, the production is primarily from formations that were formed during the Cretaceous period, and that was between about 145 and 66 million years ago. And at that time, most of central North America was a shallow sea. So this was as the North American continent was forming. And with all of that, as you know, oil and gas is formed with various, organic material that is deposited in layers, and then with pressure and time, that converts that to hydrocarbons. There's a bit of trivia here that do you know what caused the Cretaceous period to end?
Absolutely. Well, and I think this is something kind of going back to school that a lot of people don't realize this is something that's useful, but that was the comet that hit the Earth and the extinction of the dinosaurs. I think that's how most people would know it.
Yeah, exactly. So that's sort of the end of that period. So something where you'll see a lot of these fossils from that time period. But anyway, if you look at what they call a stratigraphic section, so that's where you look at the different layers of the Earth from a geologic perspective. And if you go in order from top to bottom, some of the notable intervals are the Sussex, the Shannon. Of course, you have the Niobrara Formation, which is one of the primary producing formations there. And that's split up into several different members. You'll also hear this is called the Niobrara Chalk. And we'll talk specifically about the Niobrara and the Codell here in a second. But just to know that Niobrara is important, and then the Codell Sandstone is another really important layer, and that's just below the Niobrara. And below that, there's the Carlisle, the Greenhorn, the Graneros Shale, and then the notable formation there is the D Sandstone or D Sand. And then lower than that, there's the Dakota Group, where you have the Muddy J Sandstone or J Sand. And so back prior to the advent of horizontal drilling and hydraulic fracturing, most of the production in the DJ Basin came from the D Sand and the J Sand. So there's a lot of vertical conventional wells that were drilled in the 60s and 70s, some of which are still producing today. But those were the original formations that were targeted back in the day. So that's a little bit about the geology, just kind of a broad overview there.
Absolutely. And historically with oil and gas, it's always been a thing where they learn to drill deeper and access the lower reservoirs. And I'm sure that's something that will continue here. As you mentioned, the primary reservoirs currently being produced are the Niobrara and the Codell that they're drilling in right now. The Niobrara Formation is a chalk layer that's composed of two structural units, the Smoky Hill chalk member and the Fort Hayes limestone member. And then the Codell is a fine-grained sandstone. It has low permeability, and it's not prospective throughout the entire DJ Basin since it thins out. It's heading towards the east. It's just below the Niobrara Formation. Hydrocarbons from both the Niobrara and the Codell units are commingled in many producing wells. So combined interval is often called the Codell-Niobrara interval or the Niobrara-Codell. Notable thing about the Wattenbill field is that it is thermally mature, meaning it has been cooked more. The core of the Wattenberg has a lot more of a wet gas, meaning the higher gas to oil ratio.
Yeah, that's right. And the thing that's interesting about that is, and we'll talk a little bit about the infrastructure and some of the considerations that go along with that. But with the gas being higher in certain areas, with the prices being a little bit lower on the gas side, that has caused some operators to go to the oilier parts of the field to target that first, where they can get more oil, just because the price of oil is a little bit more favorable when you're looking at kind of the economics. But yeah, that is kind of interesting if you look at the Wattenberg field. And if you look at a geologic map, they look at reflectance and different measures that they look at, and they can tell sort of how cooked the rock has been based on those measurements that they get back. And it's in that core Wattenberg field, it's definitely a lot more thermally mature. So what that means, it's a good spot to be in terms of where you want to look for oil and gas. So
why is it that the DJ Basin is so productive now?
It's so productive because there's really a combination of two things. There's the advent of horizontal drilling, like I mentioned, and then staged hydraulic fracturing or fracking. The thing to know about these are two technologies that have been around for a while, but just haven't been used in conjunction with each other the way they're being used now. Prior to about the 2000s, and kind of early mid 2000s is when that was really started. So hydraulic fracturing is a buzzword that you hear about a lot. And did you know the first frac that was performed in Kansas in 1947?
I did not know that.
So yeah, it's been around a while. So it's definitely not something new. The thing that is a little bit new is we're using it after we drill horizontal well. And what they do is they drill down to the target formation, and then they go horizontally for 1 or 2 miles. And in order to stay within that formation, they're using all of the geologic information. They have logs that they've run, and they have seismic data. And so they can tell sort of where they want to be. And then they work with what they call geosteering. So there's actually a geologist that sits behind a computer that makes sure that as they're drilling the well, and they sort of help steer the well to make sure that it's staying in the right zone so that they target as much of the resource as possible. And then what they do is after they drill horizontally, they'll go in and put in casing. And so they'll put pipe in the ground and they'll cement that in place. And they'll usually put a couple of layers. So they'll have a kind of a surface casing that goes at the top, and then they'll have another layer inside of that. So kind of imagine 2 pipes that are within each other that are cemented both to the outside, to the rock itself, and then cemented to each other. And the reason for that is they do that to protect any aquifers or drinking water that might be in layers that are above the reservoir that they're targeting. So in the case of the Niobrara, we're talking drinking water aquifers, couple, maybe 500 feet deep or so. And then you're targeting down maybe a mile below that, where you're going to hit some of these other formations. Depending on where you are in the basin, the depth will change. But let's say just on average, say 5,000 feet below that is where you're actually targeting these other formations. And so quite a ways away, they have multiple barriers in place. The thing that I know people worry about a lot of times with fracking is, is it going to contaminate the groundwater? And when these wells are drilled and done properly, when you have good well integrity, they call it, and then it's really not an issue, because there's those multiple barriers between the hydrocarbon coming up in the middle of the pipe and the actual aquifer itself. So So that's kind of the key thing. And they can check that. They do what they call a cement bond log. They'll run a tool downhole to make sure that that cement actually did bond all the way between the pipe and the rock itself. And then they can do some pressure testing and stuff like that to make sure that they have good well integrity before they go and frack and go complete the well. So once they do go in there and they go and frack the well, they use water at high pressure along with a proppant, like a sand basically, and that keeps the fractures open. And then there are additional things that they add in there. One of the interesting things is a lot of these are like things that you find in food when you go to the store, like guar gum, things like that are edible. Typically, like 99.99% of the stuff is all fine. There may be some additional proprietary things that are added. All of that has to be disclosed now in Colorado. So there's Frac Focus database. And if you're curious about that, you can go to the Colorado Oil and Gas Commission website and look up a well and click on that Frac Focus link from that well, and it'll take you to the page that lists exactly everything that the company used when they completed the well. So there's full disclosure now, which is a good thing. So I know that was a fear for a while is, what are they actually pumping down there? Are they going to be contaminating the groundwater? And this is all good things that we need to have these measures in place to protect those drinking water aquifers. And so those are where that well integrity, those checks need to be in place and need to be verified and that needs to be required before they can go complete a well. And so all that stuff, the Colorado Oil and Gas Commission has put in place over the years to protect the environment, as best they can. So that's what's done there. And after they go and fracture, what they do is actually do that in stages. So if you can imagine, they will go down and kind of at the end of the wellbore, at the interval that they're going to complete, they will frack that first. They'll pull back and then put a plug in, and then frack the next stage. And then they keep doing that in multiple stages throughout that horizontal section that they're targeting. And then at the end, what they do is they go in and then they will drill out these plugs. So typically those are like just a temporary plug that they'll go and drill out. So they'll then flow back the well. And what that does is they're producing that the water they use to complete the well as well as the sand that's out there. So what they want to do is they want to clean out all that stuff, and before they turn the well into the permanent facilities, they'll have temporary flowback equipment on site to capture that so that it doesn't damage the permanent production facilities. And plus the rates are a little bit higher usually at the beginning. And so once the rates start dropping down to what the facilities are designed for, they'll turn the well over to production and then go from there. So then that's when it'll be flowing through the permanent facilities and the pipeline and all that stuff. And another kind of interesting fact about the DJ Basin is that 80% of the crude oil that's produced in Colorado comes from the DJ Basin. So that's per the Colorado Energy Office. So definitely a productive basin.
Absolutely. And infrastructure is always huge in oil and gas, and it affects hugely the cost to produce and things like that. And I know in the DJ Basin, because it's been one of the fastest growing producing areas over the last couple of years, I've heard there's been some capacity issues being able to move what they're producing. Can you talk a little bit about that and what's been developed there in pipelines and those kinds of things?
Sure. Yeah, and the issue there is really the natural gas. So the current capacity constraints with transporting and processing, it's really due to the natural gas pipelines and the increased line pressure. And what happens there is if you can imagine, if you're trying to flow wells into a pipeline, the higher resistance you have to being able to flow that, the less you're going to be able to produce. So it'll kind of curtail the rates. So those higher pipeline pressures kind of backs up or curtails the production at the wellhead. And that's been something that they've been dealing with for the past few years as the price of oil and natural gas has recovered, and there's been drilling resumed in the DJ Basin, and they're trying to bring these new wells online, and there's just kind of a bottleneck, so to speak, there. And so as a result, there's several midstream companies, and midstream companies are the guys that operate the gathering infrastructure, so the pipelines between the well pads and gas processing plants and compressor stations and so forth. And so they're building additional infrastructure to handle this additional demand. And so companies like DCP Midstream Partners, they're building new gas processing plants and then other infrastructure associated with it to help alleviate those high line pressures. And the good news is that most of that additional gas processing capacity is going to be expected to come online at the end of this year, and this is 2018. So the light is at the end of the tunnel there, and it's going to get better, and so that should help with sort of opening up the field, the parts of the field that have been constrained over the past couple of years, and as a result, because of those constraints, it has impacted where companies have been drilling. So they've been going where there are not as big of capacity constraints first, and where it's still economic to do that, and that's typically in these lower gas to oil ratio parts of the basin where they're producing more oil and don't have to deal with as much gas. And so that's gonna even the playing field a little bit, and so with the economics of these wells, and they can look at really what's best based on what the well is going to produce. So that's a good thing.
Absolutely. And with any business, getting your product to market is a huge concern, and that's exactly what they're trying to alleviate right now. Something that's huge for the oil companies and something they look at is the geologic risk of an area. And there's a lot that goes into that. But why don't you touch just a little, Matt, on what everybody's looking at there?
Yeah, and geologic risk, what that we're talking about here, we're not talking about volcanoes or earthquakes or anything like that, but just the possibility that you won't get as much oil and gas as expected, or that there'll be difficulties in accessing the reserves that you think are there. The good thing is the geology is fairly well understood in the DJ Basin. And when you hear the companies that are exploring in certain parts of the edges of the basin, at least as it relates to the Niobrara and the Codell, it's not like the exploration you might associate with like a conventional oil and gas play where you're drilling a wildcat well. You have geologists that's looked at the seismic data and the maps, and they've got a hypothesis as to where they think oil and gas will be based on there being a source rock and a migration path to where they think the reservoir rock is, and where, in other words, where that oil and gas will have accumulated, and it would have been held there by some sort of trap or a seal. And so that's a conventional sort of model. And what they would do is drill a conventional exploration well, to see if their hypothesis was right and to see if there is oil and gas there in commercial quantities. And those types of wells have usually a lot lower success rate in those cases. So only about a third of those exploration wells will lead to commercial discoveries. So they're poking a lot of holes in the ground, and then a lot of those will just get plugged and abandoned if they don't end up being productive, or if they're what they call sometimes is a dry hole. So if it doesn't produce oil and gas, at least in a commercial quantity, it may have just a trickle, and it may not be enough to keep it to pursue it any further and put in infrastructure and all that kind of stuff. And so that's a little bit of background, I guess, kind of taking a step back in terms of when you look at exploration. But in terms of the DJ Basin, what they're really looking at there when we talk about exploration is, in the Niobrara at least, it's fairly uniform throughout. And really what they're trying to do is assess whether hydrocarbons can be produced commercially in one area versus another. And so, in the areas where they've got a lot of data and it's well understood, like the Wattenberg field, there's really, to my knowledge, very few dry holes that are being drilled, if any. So long as they don't have anything that goes wrong during the drilling, such as like if they're geosteering the well and they miss the formation and they just drill it in the wrong spot. So long as that doesn't happen, there's going to be oil and gas there. It's just whether or not it's actually economic to produce it. So, and then really what they look at as well is, okay, we're going to drill these quote unquote exploration wells in these areas. And what they're really trying to do is understand the spacing in one part of the field versus the other. So certain parts of the core Wattenberg field, they're drilling, like 24 horizontal wells per section. And that kind of well spacing, may not be doable in other parts because the geology might be slightly different within that formation. And so they're trying to assess, okay, so what does it look like when we go and drill in this more maybe southern part of the field? Are we going to get the same results as we do over here, where we get kind of a well-known, spacing. They've tested it over the past few years. It's pretty well understood, and they're just in development mode. So long story short, all this means is that the Niobrara and the Codell are economically productive in certain areas of the DJ Basin. And so while there's technically oil and gas somewhere, it may not be economic to produce at the current oil and gas prices, which we'll talk about here in a second. And do you want to talk a little bit about that, commodity prices and economic risk? And so that is something that will come into play as well.
Absolutely. And this comes into play everywhere, and it changes based on the current prices. But, some wells are economic to drill at the current oil prices of what they are now. And some companies can stand going down to around $60 a barrel and $3 a BCF. But it all depends on the area in which they're going to produce based on what the current prices are. Can they make money after drilling the well? They become more economic at the higher oil prices and gas prices. And to put into perspective, in August of 2018, Extraction Oil and Gas reported their development costs at $8.72 per BOE. And this is showing that, their future development costs and what it's going to be for developing new lands and acquiring new lands, leases, and new facilities to drill, different than the cost to operate and maintain wells. Another thing that comes in hugely as well is the political risk. Colorado has been really progressive in setting oil and gas regulations, which can be good for some things and bad for some others. We've talked about this before, Matt, and that's something that mineral right owners really should participate in, and it could greatly change profitability of drilling wells and how they drill the wells, how many wells they drill, and how many wells they can get producing in an area, and also affects the infrastructure, because the whole point of the infrastructure is to go to an area where there's a lot of wells and travel that commodity back to the market.
Anything else that you want to cover with the DJ Basin, Justin, that we might have missed today?
I don't think so. I think we've covered it pretty well, Matt. Give it a good roundabout.
Sounds good. So again, if this has been useful in terms of just providing an overview of producing oil and gas basin, this is something that you want to, in your particular area where you have minerals, shoot us an email, feedback@mineralrightspodcast.com. And please stay tuned and subscribe on iTunes or wherever you get your podcast. And please leave us an honest rating and review. It really will help make sure that we're able to get this show out to other mineral owners as well who need this information. And to, again, ask us a question, send us an email, leave a comment at mineralrightspodcast.com. So thanks again, and we will talk to you next time.
All right. Thanks, Matt. Until next time.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.